Hi, this is Zak Mir, editor of Spreadbet Magazine, with a look at some bulletin board hero stocks on Wednesday, the 17th of December. Starting off with Concha, where you can see there's been some shenanigans after the initial November 4.2 pence support, basically a double bear trap from below that for the end of November, and then this month it's notable that this month's also put in a higher low versus November, which is helpful, and the shares have pushed up quite strongly back above that old 4.2 pence floor, which was the counter move ahead of the peak near 7.5–8 pence last month. The view now is that while there's no end of day close back below the initial November support 4.2 pence, we should see further attempts at returning to the highest levels of the year, and that would be the target of September resistance line projection, now just over 8 pence. If you're cautious on the shares, you'd wait for an end of day close back above the 50-day moving average of 5.28 pence. But it looks as though there's enough work being done here, as well as the double bounce off this RSI support line, to mean that the share should stay above 4.2 pence and progress over the next 2 to 4 weeks. Next up is a stock which is the ultimate bulletin board hero, or not, as the case may be, when the share price is going down. Here we have Gulf Keystone, descending price channel here from March this year. Looks as though there's a possibility that there's been a rebound off this March, or a rebound which could last off this March support line here. That would render this October price action as an overshoot to the downside, which I suppose is understandable. And we also have obviously the higher low for December at 48 pence versus the October low around the 42 pence mark. So chance of intermediate rebound here back within this channel. The best case scenario here would be a return to 80 pence. What is also noticeable is the way that 60 pence was support on the way down. If we can break back above that over the next couple of sessions, that would be quite a decent bear trap rebound signal, as would a break of this resistance line from November in the RSI window at around the 45 level. If that can be broken, that could create quite decent positive momentum, which would take the shares back towards the main 1 month resistance zone at 80 pence. But obviously, it's difficult to pretend that the overall pattern here is not still of a decline within a descending price channel. Another stock which is in focus with private investors at the moment is Savannah Resources. Here we have obviously a consolidation that's been in place basically since May, 4 pence to 6 pence, which you did not have to be George Soros to identify. Perhaps because that range was so easy, yesterday delivered a clear out bear trap right down to the 3.12 pence level. That should have flushed out most technical and fundamental traders, and there is a chance now with the recovery of this October 3.75 pence floor that we've got a bear trap buy signal on our hands, and that could return the shares to the 4 pence to 6 pence range, which has been in place, a decent upside from current levels. If you're cautious on the shares, maybe wait for an end of day close back above the 10-day moving average 4.13 pence, or maybe one of the 20 or 50-day moving averages. But this should be a decent technical buy signal over the next few weeks. That's it from me. More updates at spreadbetmagazine.com.